Hello friends, welcome to another video update. Well, we are into July and the first half of the year was quite eventful, so let's recap. 3 months ago, on April 2nd, after President Trump's Liberation Day, the initial tariff announcements sent the markets down 20%. Remember, a correction is a 10% decline and a bear market is a 20% decline. We average about a 14% intra-year decline if you look at the past 50 years or so. And we believe that corrections are healthy for the markets. So we stayed the course. On a closing basis, the market was down 18.9%, but intraday we did cross that 20% threshold, 21.3%. This was from the February 19th peak to the intraday low of April 7th. Well, guess what? All of that has now recovered. We're back. The markets are near all-time highs, so good news. Huzzah. As a side note, very interesting how similar this was to 2018, 7 years ago. Instead of an 18.9% drop, we had a 19.8% drop. A guy named Jay Powell, you may have heard of him. He was the newly appointed Fed chair by Trump that year. And, well, Trump seems to be having a little buyer's remorse, you might say. But a lot of similarities. And history doesn't repeat itself, but it sure does rhyme. In any case, the S&P 500 staged a strong V-shaped recovery since. And so far, fears that the trade tensions would slow the economy or drive up inflation have not yet played out. We'll see. Time will tell. In other news, the recent passage of the One Big Beautiful Bill has brought some clarity to individuals and businesses as they plan, especially with taxes, but more to come on that in future videos. As we look forward to the rest of the year, we will continue to watch the data closely. We'll focus on a new earnings season very soon, and we'll also keep a close eye on the Fed. Reach out anytime with questions. Thanks for your time as always, and have a great day.